Welcome. In this video, we're going to break down bonus depreciation and how it works with cost segregation right now, in 2024 and 2025, so you can make smarter decisions about your real estate taxes. This isn't tax jargon, it's practical planning for real investors. Let's start with the basics. When you own income-producing property, the IRS lets you recover your investment over time using depreciation. Residential rentals are depreciated over 27.5 years. Commercial properties are depreciated over 39 years. That means you deduct a little bit each year, slowly lowering your taxable income over decades. Cost segregation, guys. That's better than nothing. But what if you could accelerate those deductions? That's where bonus depreciation and cost segregation come into play. Cost segregation is a strategy that breaks a building into smaller parts, things like flooring, lighting, plumbing, and site improvements, and reclassifies them into shorter depreciation lives. Cost segregation, guys. Some of these parts may depreciate over 5, 7, or 15 years instead of 27.5 or 39 years. Bonus depreciation lets you take an even bigger chunk of those shorter life assets in the first year they are placed in service. It's like turbocharging your depreciation. KBKG. So, what's the deal in 2024 and 2025? Under the old tax rules, bonus depreciation was scheduled to phase down each year. In 2023, it was 80%. In 2024, it went down to 60%. And in 2025, it was set to fall further. Engineered tax services. But there was a major tax law update in 2025, sometimes called the One Big Beautiful Bill Act. It restored 100% bonus depreciation for qualifying property acquired and placed in service after January 19, 2025. Cost segregation, guys. This means that for many real estate investors, if you close on a property after January 19, 2025, you can deduct 100% of the cost basis of qualifying assets in the year they are put into service, instead of depreciating them slowly over years. Baldwin Appraisal SE. Now let's be clear about what qualifies. Bonus depreciation applies to property with a recovery period of 20 years or less. That includes tangible personal property, like appliances, carpeting, furniture, and certain land improvements. Items often identified through a cost segregation study. SVA certified public accountants. Note: the building structure itself, the walls and roof, still gets normal depreciation over 27.5 or 39 years. Bonus depreciation doesn't apply to the long life structure. Baldwin Appraisal SE. To illustrate this, imagine you buy a commercial property for $2 million. A cost segregation study might find that $400,000 of the purchase price belongs to short life assets like flooring, signage, and certain interior finishes. Cost segregation services. Free quote. Under the old law, you would take these cost components and depreciate them over their shorter lives, but not all at once. With 100% bonus depreciation, you can now write off that entire $400,000 in the first year instead of spreading it out. That front-loads deductions and significantly reduces taxable income in the year of purchase. Cost segregation services. Free. Quote. Here's why this matters. Lower taxable income in year one means more cash stays in your business. That additional cash can be used for renovations, expansion, debt payoff, or even more property purchases. In other words, bonus depreciation and cost segregation amplify your cash flow where it matters most, earlier rather than later. But what about properties placed in service before January 20th, 2025? Properties placed in service before that date may be subject to lower bonus depreciation percentages, such as 40% in 2025 and potentially 20% in 2026 for qualifying assets. Engineered tax services. So, timing is critical. It determines how much bonus depreciation you can actually claim. Another thing to keep in mind, bonus depreciation now applies to used property too, as long as it is new to you and meets the criteria. This change makes these tax benefits accessible to buyers of existing buildings, not just newly constructed ones. Plant Moran. There's also Section 179, expensing, which is another tool that can be used alongside bonus depreciation. It lets you deduct certain qualifying property immediately, up to a threshold. In 2025, Section 179 limits increased, allowing greater deductions under that provision. Cost segregation, guys. But Section 179 and bonus depreciation work differently and have unique rules. So it's important to understand how each applies to your situation. Now let's talk about why investors should care. Too many investors overlook these tax provisions because they seem complex or technical. But the math is simple. Bigger first-year deductions mean lower taxes now. Lower taxes now mean more cash for opportunities that make your portfolio stronger. And in a market where margins matter, taking advantage of bonus depreciation can make the difference between a deal that pencils out and one that doesn't. Of course, there are risks if you apply these strategies incorrectly. Misclassification or weak documentation can raise audit flags. That's why a formal engineered cost segregation study, backed by thorough documentation, is critical to protect your deductions and support your tax positions. Cost segregation, guys. Bonus depreciation also doesn't eliminate taxation forever. If you sell the property, depreciation recapture rules may apply, unless you use strategies like a 1031 exchange to defer gains. In short, bonus depreciation, coupled with cost segregation, supercharges your first-year tax deductions, significantly boosts cash flow, and gives you more flexibility in how you deploy capital. But timing, proper study methods, and knowledgeable tax advice are key to maximizing these benefits while staying compliant. If you want to explore this strategy for your portfolio, it starts with seeing the numbers for your specific property. Visit costsegregationguys.com to request a free personalized analysis. They'll help you model how bonus depreciation and cost segregation could impact your tax situation and cash flow.